Ladies and gentlemen, welcome back to the channel. Tesla stock today is up about 0.7%. We're going to be going over what's happening in the broader markets today, what's moving Tesla. The markets are recovering from the down day that we had yesterday. But we're also going to cover your Tesla stock breaking news, what's happening in option activity, what the short sellers are doing today, and more, including this bombshell prediction for Tesla by somebody that went to the Tesla factory recently and actually seen the Optimus version 3. Now, what he says here is exciting as hell. Obviously, we have not seen that for ourselves. We don't know what that is precisely capable of at this moment in time. We're waiting on, 2.5 to get more details on that. But 2027 is when we're expecting this version 3 of Optimus to launch commercially. Like, you're not going to be able to buy one, but if you're a company, you run warehouse operations, you're doing repetitive tasks, things like that, you're going to be able to buy an Optimus in 2027. Why I'm even bringing this up is really in the second half of this year, Optimus is going to become a much bigger deal for Tesla stock and become a catalyst to move the stock higher. That's why I think Tesla is going to be a $900+ stock by the end of this year. And this commentary makes me pretty bullish on some of those targets and even more bullish on the long-term future of Tesla. Now, that's scratching the tip of the iceberg and what we need to discuss here in today's episode. Do me a quick favor before we go ahead and get into it. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, let's begin. Oh, and I just have to say, this is probably one of the most bullish things I have heard ever before for Tesla. Jason here, which was on the All In podcast, says he saw the version 3 of Tesla's Optimus robot. He says, quote, 2 Sundays ago, I went to Tesla with Elon. I saw Optimus 3. I can tell you now, nobody will remember that Tesla ever made a car. They will only remember Optimus and that he is going to make 1 billion of those. It's going to be the most transformative technology product ever made in the history of humanity. Come on now. Dude, this is from, again, somebody that seen this robot that was hanging out with Elon. You want kind of a sneak peek here on what the next 12 months is going to look like for Tesla? Here it is. I mean, you're first to this information. Wall Street probably is not paying attention to what Jason here just said about Optimus. You are about to see something, the most transformative technology product ever made in the history of humanity. That's a pretty strong statement. Now, he was obviously hanging out with Elon, and Elon probably started throwing out some numbers here, so he says they're going to make 1 billion of those. Yeah. Let me tell you now, Tesla's stock is not priced for Optimus. Tesla's barely pricing in the robotaxi potential, a fraction of it, let alone any of what Optimus is going to do for Tesla. And just so everyone is aware, again, Tesla yesterday announced, Elon really announced for Tesla yesterday, that following February 15th, you will no longer be able to purchase FSD outright. It is going to be available on subscriptions only. Now, Tesla is still offering free FSD transfers for every new Tesla vehicle. So this might be grandfathered in for a while where you'll be able to transfer FSD to a new vehicle. But for anyone that is buying a new vehicle that already does not own FSD is going to have to subscribe to FSD and able to use FSD. Now, that's important. Wall Street really only cares about subscription revenue, right? FSD sales have never been a catalyst to move Tesla. If there's good or bad sales in a quarter, it's just never impactful because it's hard to predict. It's impossible to predict what one-time purchases are going to lead to in the future. You can estimate they're going to grow, but you don't know that. Subscription revenue is a lot easier to forecast, and it's something that Wall Street pays a much higher premium to.
Refinery in North
Tesla
America.
also released a video of their new lithium refining facility, and it looks like, you know, there's a lot of progress here in actually getting up and running and starting to provide battery grade lithium to operations. Now, Tesla was spotted testing the redesigned Tesla Semi for the first time in Fremont, California. It's more efficient and increased payload capacity. The kilowatt hours per mile are a 15% improvement versus the old Semi, designed for autonomy with a 500-mile range, among other changes. This is one of the last reiterations or versions of the Tesla Semi we are likely going to get, because we start mass production this year of the Tesla Semi. It's been years in the works here, but it could actually be a significant contributor to Tesla's business this year and next year. You're expecting up to $10 billion of revenue in the next 12 months from the Tesla Semi. So, you know, last I checked, Tesla did about $100 billion in revenue for 2025. That could add about 10% alone just from the Semi, and not a lot of people are talking about. Road One, a major US short distance and logistics provider, has added its first Tesla Semi to its fleet. A 35-year-old man who set a Tesla Cybertruck and showroom building on fire in Mesa, Arizona last spring has been sentenced to 5 years in prison. The judge said, quote, "Arson can never be an acceptable part of American politics. Mr. Moses' actions endangered the public and first responders and could have easily turned deadly." Now, we have a new opinion piece here from Charlie Garcia that says, quote, "I've spent years watching Tesla from the sidelines, convinced the valuation was insane. It was insane for a car company, but for the only publicly traded entry point into a vertically integrated AI empire, maybe not. I own the stock now." Tesla has a data moat hiding in plain sight that almost nobody is pricing. Every Tesla on the road is a data collection device. The cameras aren't just for safety, they're training AI systems in real time. According to Tesla's FSD safety page, the fleet currently has accumulated close to 7.3 billion miles of real-world driving data, with 2.63 billion of those miles on city streets. When Musk makes the same prediction, analysts roll their eyes and mutter about missed timelines. The pattern is remarkably consistent. Musk is optimistic on timelines, on timing, but accurate on direction. Musk said electric vehicles would dominate transportation. Analysts laughed. EVs now command most major automakers' strategy. He said reusable rockets were possible. Aerospace engineers scoffed. SpaceX lands them routinely and has made NASA a customer. He said neural networks could drive cars. Skeptics pointed to edge cases. Tesla's full self-driving is on public roads in multiple countries. When you buy Tesla, you're not buying a car company trading at an absurd multiple to automotive earnings. You're buying the only liquid access point to a vertically integrated AI empire that spans training data, compute infrastructure, global distribution, physical deployment, and cash generation. I would also add manufacturing in that. That is one of the things that I am most bullish on for Tesla. With all of that other stuff, that's great. When you're talking about things like Optimus and vehicles and what could come down the line from that, it's really manufacturing. The companies that succeed versus the ones that will not long term, with AI, with robotics, for an example, it's always only ever came down to manufacturing. You can basically get the software, right? You know, you can kind of get the same software as any other company. You can hire enough software engineers to, you know, build something that's similar to Tesla, or make a robot prototype, right? That's one thing. The biggest problem is manufacturing that profitably at scale. That's the true problem. And I think that's the thing that I'm most bullish on Tesla for. Tesla has, you know, supreme manufacturing capabilities from doing this over the years, right? They've been doing this for a long time. And, just nobody's going to be able to compete with that. Look at the Cybercab versus, Waymos, right? The price point difference, it's all in manufacturing. So while all those other things are great, I think manufacturing is a big part of the bull thesis for Tesla. But he says the car business isn't the point. The car business is the cash register that funds the empire. Now, in option activity today for Tesla stock, you have 276 different trades totaling $67.28 million with a positive order value of 57%. So pretty neutral, slightly more positive than negative, but pretty neutral overall. Short interest of free float sits at 2.86%. $30 billion sold short in Tesla, totaling about 68.3 million shares that are sold short. Short interest of free float sitting at 2.85%. So shorts have covered on some short positions recently, but there's still a large short position. I don't think you really start to see shorts cover though in large numbers until the stock is above 500. Above 500, I think there comes a point where there's a lot of pressure on shorts to get out of short positions. Once you get to 500, what's to stop the stock from going to 600 or 700 pretty shortly thereafter? Now, if you take a look at the broader markets today, the Dow is up 0.8%, S&P is up 0.7%, NASDAQ up 1%, Russell 2000 up 1.22%, and the VIX is down 8.1%. What's happening today? Well, there's a couple of different things we'll get into in just a moment. 10-year Treasury yields are actually up 2 basis points. Oil down about 5%. This is a big story of the day today. Oil falls more than 4% as traders see Trump backing away from Iran's strike threats. There was some nervousness last night when Iran shut down their airspace. I think they did that in case there was a strike. They wanted to maybe respond to that. But at the time, there was reports that there were explosions in the capital of Tehran. Futures kind of sold off on that. Oil caught a little bit of a bid, but come this morning and there was no strike, and Trump's recent comments sound like there's less of a risk of that. Now, we talked about this before. We've talked about this topic on the channel a lot over the years, but basically the stock market doesn't care about war. They don't care about people killing each other. Okay. In fact, during World War II, the stock market in America did very well because America was winning the war. Like, the markets do not care about conflict. Hence, Russia, Ukraine, it just doesn't care. Wall Street cares about financial impacts. They care about numbers. They care about money. Well, Iran and the Strait of Hormuz, that's the only relevant thing for markets. And it's a big potential problem if the situation gets worse. And it's possible that it could get worse in the days and weeks to come. So I'm going to talk about this. But the Strait of Hormuz controls about 35% of the world's oil supply. Iran basically controls that. Now, you could say that if they wanted to shut that down, that is basically their version of the nuclear option. That is what would do the most harm to most of Western countries, right? Financially speaking. You shut down the Strait of Hormuz, 85% of Asia gets their oil through this strait. That would be a major problem. Oil would probably hit $200 a barrel. That would be an oil price shock. That would be something that would be very negative. Now, it's a very low probability that would happen. Again, that's the nuclear option. The leadership would no longer exist in Iran if they did that. And America would open the Strait of Hormuz within probably a week or two, but it would cause some pretty devastating financial consequences. Well, there's been a lot happening in the markets recently between the 10% interest credit card interest cap, which is actually a much bigger deal than it sounds like. We've talked about it a little bit on this channel, but that could be a recession catalyst in and of itself, something I am watching and monitoring very close. You have the Jerome Powell feud, you have the Greenland situation, you have all these other things, Supreme Court ruling going on. So it's been hard to kind of differentiate what is moving markets on any given day. But definitely after the reaction today and what we seen yesterday, it became clear that the Iran situation and the oil potential problem has been the biggest driver of markets. Well, Trump basically said, hey, look, things are getting better in Iran. Trump said, quote, very important sources in Iran say that the killing has stopped. There's no plans for executions. I've been told that on good authority, he said, adding that the White House would watch how the situation unfolds. So if things get worse, then that's obviously like bad, right? That's going to be negative for this market at this point. The markets are responding to this, but as of now, markets are, taking a breath of fresh air and relief from this recent tension. Now, also in really good news today, and what is helping to really boost technology, is Taiwan Semiconductor Manufacturing Company, TSMC or TSM. They beat Q4 targets and guided up on advanced chip production. Okay. The world's largest contract chip maker, better known as TSMC, earned $3.14 per U.S. share on sales of $33.73 billion in December ended quarter. Analysts polled by FactSet had expected TSMC to earn $2.90 a share on $33 billion in sales. A year ago, they had $26.38 billion in sales and earned $2.19 for the current quarter. Oh my God, what is happening? For the current quarter, TSMC expects revenue of $34.6 billion to $35.8 billion. The midpoint of $35.2 billion topped Wall Street's target of $33.38 billion in the first quarter last year. Taiwan Semiconductor posted sales of $25.8 billion. In the fourth quarter, shipments of 3 nanometer chips accounted for 28% of total wafer revenue, 5 nanometer accounted for 35%, and 7 nanometer accounted for 14%. All told, advanced technologies defined as 7 nanometer and smaller nodes accounted for 77% of total wafer revenue at TSMC. They said, quote, our business in the fourth quarter was supported by strong demand for our leading edge process technologies, Chief Financial Officer Wendell Hong said in a news release. Moving into the first quarter of 2026, we expect our business to be supported by continued strong demand for our leading edge process technologies. We knew this was coming. Right? We knew TSMC was going to have good earnings, or TSM. How did we know that? Well, the CES Tech Conference in Las Vegas, everyone had good things to say on AI demand. NVIDIA said demand has accelerated. AMD's CEO Lisa Su said that AI training compute is going to have to increase 100x in the next 4 to 5 years. Like, I don't know if there's ever going to be another, headline or quote that sticks with me like that, at least for the foreseeable future. Let me rephrase that again. Let me say it again. Lisa Su, AMD's CEO, said AI training compute, the amount of data centers we have, the amount of GPUs that are being used for AI, will have to 100x, not 10x, not 5x, not 20x, 100x in the next 4 to 5 years. I like to discount things to account for risk, right? I don't take things at fair value all too often, right? Or people's word in markets, at least. Even if I discount that by 50%, that is a 50x in trading compute in the next 4 to 5 years. You are just getting started with AI. Now, what's exciting about that is, it's not the infrastructure AI trade that's going to make you a lot of money down the line in the future. It is the companies that build things on top of that AI infrastructure, that are using those GPUs, that are building things with AI. That's why I often group AI into AI enablers, like semiconductor companies, infrastructure, and then I group others into AI enablers, companies that are building things on AI. Think about the internet, right? Enablers of the internet, Cisco and the telephone companies and all of those, right? The physical, like lines and early data centers and all of that. Whereas the internet appliers were the Metas, they were the Amazons, they were these companies that actually did something big with the internet, right? That's why I'm specifically bullish on software for this year, but you do need this AI and enabler trade, the semiconductors, to continue to do well, at least for now, because AI software, AI enablers are not far enough advanced to take the hype away from NVIDIA and support this market, right? There's not enough use cases out there right now, but that is going to change over time. So this is a big, another breath of fresh air, a sigh of relief, if you will, for this market, as again, we knew TSM earnings were going to be good. Now, TSM stock was at all-time highs. I was looking at the options yesterday, so I did not play TSM. TSM is up 7% today, basically in line with kind of the forecasted move. But the stock going higher when it was already at all-time highs on better than expected earnings is great. We knew it was going to happen because we paid attention to the CES conference, but Wall Street, they have short-term memory loss. They pay attention one day, forget about it the next day. So that's also big today. Semiconductors obviously doing well. This is a great sign for NVIDIA, AMD, Micron, Broadcom, all of those guys. Technology doing well. Also, Microsoft up about 0.5%. Palantir up about 1%. Apple's break even. Amazon's up 1.5%. Tesla's up about 1%. Google's down 1%. Meta's up 1%. Software application, probably one of the worst areas of this market today. CrowdStrike, Uber, ServiceNow, Adobe, and Intuit. Some of those stocks pretty deep in the red today. Banks recovering a little bit, specifically Citi following their earnings, stock up over 4%. Asset management doing a little bit better. Capital markets like Goldman Sachs and Morgan Stanley definitely doing well today. Healthcare, one of the biggest losers today, led by AbbVie and Eli Lilly, that are down between 2 and 5%. Industrials, consumer defensives doing a little bit worse. Oil and gas doing a little bit worse. So there definitely is a little bit of a flip today towards that risk on area. One area I'm specifically bullish on that, again, has not done well so far in 2026 is software applications, specifically AI software companies. Some of those are actually doing okay today, especially small caps. Again, you can see from the headline index, Russell 2000 up 1.26% today. But it's really a stock picker's market in this environment. Now, Fed Goolsbee also made headlines today. He says inflation could come roaring back if the central bank independence goes away. He says, quote, "You're going to get inflation come roaring back if you try to take away the independence of the central bank." So this caught some of the headlines today. I don't exactly agree with that per se, but yeah, you definitely want an independent central bank. And I think there's a lot of support for that. I don't think anyone wants to not have an independent central bank, but this whole Powell investigation continues to be, at least to some degree, an overhang on this market. Once it is resolved, you likely see stocks do better on that news, but it's not the main driver of this market right now. Economic data today, we did get initial jobless claims that came in at 198,000. It looks like the labor market is doing a lot better than most people expected. We also got New York Empire State Manufacturing Index that came in at 7.70 versus the expected number of 1. So a lot stronger than expected there. Philadelphia Fed Manufacturing Index came in at 12.6 versus estimates of -4. So better than expected economic data today. Philly Fed Business Conditions came in at 25.5. Fed CapEx Index came in at 30.30. Both of those numbers better than expected. Philly Fed employment came in at 9.7, a little bit worse than expected. New orders came in much better than expected at 14.4, and prices paid came in at 46.90, which was better than expected. So that's also great news today. We had a speech from Fed Bostic, Fed Barr, and Fed Barkin today, but again, we're really not reacting much to Fed commentary these days. It's definitely not like it was in 2022. Thus, the probabilities of rate cuts really are not moving all too much recently. We are expecting the first Fed rate cut in 2026 in June, on June 17th. The probability of a rate cut June 17th is 46.1%. Probability of a pause at 36.1%. So this actually did move up quite a bit today with the initial jobless claims, and it's the biggest move we've seen in a while. For an example, last week, there was a 20.9% chance of a rate cut June or a pause June 17th. Now it's 36.1%. Yesterday, the probability of a pause through June was 29.5%. Now, the probability of a rate cut didn't move too much, just the probability of multiple cuts by June really has went down in the last week or so. Probability of a rate cut, at least one by June, was 47.5% yesterday. It is 46.1% today. So you're still pricing in a cut in June. And honestly, I think there's a lot of room to price in, more cuts from here, especially as we get more CPI reports that show inflation is making a lot of progress. Wall Street didn't really pay much attention to the CPI report because there's been all these other things going on. But CPI came in much better than expected, like wildly better than Wall Street's expectations. And I'm surprised you actually did not get more of a positive reaction in the markets from it. Also in the news today, mortgage rates dropped to a 3-year low. This is the lowest they have been since September of 2022. Mortgage rates fell to 6.06%, which is stimulative to the economy. Let's face it, if people can buy homes, sell their old home and have a cheaper monthly payment, they're going to keep more equity in their bank accounts and be able to spend more money. So one of the big kind of bull case scenarios for next year, or one of the big additions to the bull case scenario for this year, is if real estate begins to pick up, if transactional volumes come out of this depression we've been in for the last 3 years, that could give people a lot more equity like in their bank account, instead of just plowing that all into a new home, or maybe you can't even afford a new home to begin with, then that could give people a lot more money to go spend out there in the economy. Russia says today that they vow to respond to European militarization. It says Russia is closely monitoring Europe's militarization, including NATO buildup, strike systems, and arms support for Ukraine, and will factor it into military planning. Russian Foreign Ministry spokeswoman Maria said here, Moscow plans to modernize its weapons and equipment in response to perceived threats to its security. Goolsbee also said today that he expects to see rate cuts this year. CEO Larry Fink today says, I do not believe there's an AI bubble by any imagination. So that's really comforting headlines for a lot of Wall Street. Larry Fink says if we underinvest in AI, China wins. Larry Fink says the U.S. will grow above trend over the next few years. He says investing is safer today than it was a year ago. Larry Fink says there's good justification for lowering rates if you believe the power of AI. Now, also in news today, Trump told Iran he does not want war and will not launch an attack, according to Iran's ambassador to Pakistan. Now, CNN Fear and Greed Index today sitting at 66. Yesterday it was neutral at 55, so definitely a big improvement today. And a lot of that has to do with the VIX and some call activity picking up a little bit. The put and call options metric here, the 5-day average put to call ratio, has been in extreme fear for a while now. We still have some negative things on the near-term horizon, potentially negative catalyst, right? Like Supreme Court ruling on tariffs, 10% interest rate cap on credit cards. Those things could potentially be negative, but people are getting a little bit more comfortable with where markets are right now. Market momentum is greed, stock price strength, extreme greed, stock price breadth is neutral. Again, put and call options, fear, market volatility is neutral, safe haven demand, extreme greed, and junk bond demand in extreme greed as well. The most recent AI investor sentiment survey that came out this morning shows bullish investors seen a big uptick to 49.5% from 42.5% last week. Neutral investors fell from 27.5% to 22.3%, and bearish investors fell from 30% to 28.5%. 0.2%. Now, last but not least, if we take a look at the percent of stocks trading above their 50-day moving average, coming in today at 71%, which is getting to the higher end range. Now, markets normally tend to like peak out and go through a bit of a correction once you get to about 75 to 85 on this metric. But again, people are really bullish for 2026, and there's not a lot of, bullish activity in markets, at least up until today. And then today you could still make the argument that how good is it really if Google's down 1%, if healthcare is getting smoked, if Uber's down 1%, ServiceNow's down 2%, CrowdStrike down 3%, Oracle's in the red. How bullish is it really? So nonetheless, let me know your thoughts on this market, Tesla stock, down below in the comment section. Do you think that Tesla is getting ready for a move higher? Tesla's earnings are coming up. I personally think the stock is in a really good position for earnings with, being down about 11.5% from your recent highs, your all-time high on December 22nd. It's not like the stock is priced for perfection by any means necessary. So, earnings later this month could be quite fruitful for Tesla, but we'll talk about that a little bit more in the next video. Ladies and gentlemen, that is it. Come join the trading community if you guys would like to. Link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.